Bum, 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 ba-dum. Woo! Welcome back to Strongman Personal Finance, everybody. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we're going to go watch some Jeremy Financial Education and see what he had to say about Amazon recently. And then I'm going to do my own model, which I made in 20 minutes over lunch. And I'm going to tell you what I would actually buy Amazon at. So, of course, Jeremy has a bigger channel than me. I'm just an idiot. I'm actually breathing hard. God, what is wrong with me? Maybe because I worked out earlier. I need to do more cardio. So Jeremy has a bigger channel than me. 716,000 subscribers, millionaire, bigger house than me, more kids than me, more everything than me, more Teslas. I have 0 Teslas. He's just better than me. So obviously he must know what he's talking about. So we're going to watch this quick video and then we're going to look at Amazon and see what I would pay for it. But, you know, like I said, I'm just a little chump compared to LaFoo-Foo. Jeremy LaFoo-Foo. Buy his cars, bro. It's only $100 billion. So this video was made on March 9th, 2022. So that was a month and some change ago. So let's see the expert analysis that Jeremy had to give us.
Versus here today, it's at a 10 during that crash that the stock had, right? So what you're essentially seeing here is Amazon is trading pretty much in line with the cheapest it ever has. You know, even in the depths of these other crashes and corrections that have happened in the past, okay? And so that's why it was either yesterday or the day before, in one of those videos, I said, Amazon is about to make an epic run. And I don't know if it starts in a few weeks from now or a few months from now. But what I can tell you is Amazon is set up as a stock to make an epic run because it does not trade this cheap for very long. It can maybe trade this cheap for a few weeks, maybe a few months, and then it's back on to another huge rally where it's going to rally to $4,000+ a share.
$4,000? Jesus Christ. Oh my God. What a genius. So let's go look at the stock price again in this video. I can't actually read these stupid charts that well. So I guess it's at $2,976 and a month and change ago. It's never going to be this cheap, ladies and gentlemen. It's going to go on a massive run to $4,000. What's Amazon at now? This stock has experienced elevated volatility. Good call there, LaFoo-Foo. I thought you couldn't time the market, bro. Why are you saying it's going to go on a run? And maybe it will now. I mean, it's definitely cheaper now. I can tell you that. Yeah, so when did he do that video? March. When was it again? March 9th. Where is it? Okay, so it's $2,785. And now it's $2,479. Good job, freaking LaFoo-Foo. What a moron. Now, let's go look. Let me close out Robin's stock here. Baba did good today, by the way. I'm a genius. I'm a course, bro. And we're going to see if there's any interesting comments before we get into the modeling. Nope, no interesting comments. Back to work. So we're going to go check out Amazon's financial statements, and we're going to see what I would pay for Amazon. Now, one thing I noticed right off the bat is that Amazon had a great 2020, 2021. Why? STEMI checks, everybody locked down, deliveries preferential over going to a store. Makes sense. So you look at these numbers here, and they have revenues broken down by region and by segment, basically. So you have North America went from $236 billion in revenue in 2020 to $279 in 2021. International grew by about $23 billion, and AWS grew by about 18-something billion dollars. You look at the growth rates year over year, it's been slowing down for North America. You see in 2020 it was 38%, STEMI checks, lockdowns, 40% international, 30% AWS. And there's been a slowdown in North America and international, which is to be expected. However, AWS is growing faster. So if you really want to accurately model this, you really need to separate the different revenue segments and grow them at their respective rates that you think they're going to grow at. But I'm freaking lazy and I'm not going to do that. So I'm going to use a rough estimate of what I think Amazon's revenue is going to grow at based on historical trends. Usually I look at the past and I say, okay, is there a fluke year? I'm going to discount that. But in years before that, let's say Amazon grew at 20%. Well, as Amazon grows, its revenues will shrink. Its revenue gains every year will shrink and shrink and shrink. The more mature you are, the slower your growth. It happens to every company, including Tesla. So let's go down and see if there's anything else interesting. My mouse freaking works. I'm actually going to get a mouse that I can plug in because this freaking wireless thing kills me. I saw something about free cash flow. So you can see here, Amazon's free cash flow in 2020 was $31 billion. And then it was negative $9 billion in 2021. Their operating cash flows decreased and their capital expenditures increased. So you went from basically a $40 billion swing. It was because of two things. Operating cash flows decreased for whatever reason, probably because the pandemic was good in 2020. 2021, it slowed down. And they did a bunch of capital expenditures, which is not necessarily a bad thing. But their freaking free cash flows all over the place. So what I'm going to do is I'm going to go to macro trends. It's nice to have these freaking summaries. Instead of digging through the financial statements, it's like, oh, God, it's such a pain. And we can actually look at Amazon's historical trends. So we can see with profit margin on the bottom here, you go back to 2010, they had a 3% profit margin. They're actually not a very profitable company. And you see it actually went negative for a couple quarters. And it started to basically steadily increase over time. Now, what I don't want to do here is to use the pandemic. Because you see when the pandemic started, boom, their freaking profit margins rocketed up all the way to 7%, which is pretty freaking good. This is like the JD in China. It's basically the same thing as Amazon when it comes to profit margins, at least. So when I look at this and I say, oh, 7% profit margin, am I going to use that? No, I'm not going to freaking use that. I want to be conservative. I would maybe go with 3 or 4% just to be safe, or even lower. Because you look at Amazon's most recent earnings for March 2020, they actually had a negative profit margin. I don't know if it was because of a one-time write-off or what. You look at the prior quarter, 10%. The quarter before that, 2%. Quarter before that, 7%. It's freaking all over the place. So 3, 4%, okay, we'll go with that. So let's pull on the bottle. And yes, this is not like super in-depth financial analysis. Profit margin, we're going to say it's 4%. Now, let's go look at trailing 12-month revenue. Because your start point is the last 12 months of revenue, and then you're going to grow that revenue at a certain percentage going into the future. So let's add that up. So they had blah, 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 blah. Oops, wrong tab. This is so hard. You see, this is literally all you have to do to screen out a stock, ladies and gentlemen. It's not hard. Now, this isn't going to give you a full in-depth analysis of the stock because, like I said, you have to look at the revenues. You have to disaggregate them and look and say, okay, what rate is each segment growing at? And you actually can project that forward to get a more accurate kind of revenue growth. But I'm too freaking lazy for that. I just want to screen it out because my revenue assumption will roughly be what Amazon's growth rate is going to be. Maybe a percentage point or two off. But even if that's the case, that's not going to make such a massive difference that I can't tell whether this company's unprofitable or not. So Amazon's, or not unprofitable, but a good buy or not. Last quarter it was unprofitable, but in general, I don't think they're going to continue a negative 3% profit margin. That was probably a fluke. Okay, so their trailing 12-month revenue was $477 billion. Is that correct? Seems roughly right. Yeah, seems like I did my math right there, ladies and gentlemen. Next, we have shares outstanding. Of course, I don't know what freaking happens with this website, but it's like all over the place. Like you can't find crap at the time. Shares outstanding. Amazon macro trends. All my typos. Here we go. Okay. See, now it's the same freaking website, but there it is. I'm a clown, bro. So, shares outstanding. Looks like they're growing shares. They're issuing shares. They currently have 515 million shares outstanding. That chick for a second. What was that? Am I looking at my free time? Discount rate. I want a 15% return. Why? Because I'm not going to buy an individual stock unless I get that. But you know what? I'll be nice. We'll say 10%. Revenue growth. 1,000%. Let's go look at revenue. So trends. Actually, before we do that, let's look at share issuance. So it looks like they've roughly been growing their shares at a rate of, we'll call it 1% per year to be nice. We'll do 1%. Revenue my EVENUE. Let's see what revenue my EVENUE is doing. No, I want to meet Christine. Now, you got to be careful with this revenue because during the pandemic, there was a massive explosion in a lot of different companies. You can see some of the quarters just freaking exploded. So I'm going to use the trend before the pandemic because that's what I think is reality. And then I'm going to slow it down. So you look in the past and you see, 30, 40, 50, 20, 20, 20, 15, 20, 20, 20, 20, 30, 20. It's all over the place. To be honest, I'm probably going to use 15%. Let's be conservative and say 10% going into the future. I'm going to discount the pandemic. I don't believe this. Year over year, 40%, 20, 30%. No. We'll use 12.5%. Be nice to Amazon. Okay. And PE at disposition. So what is Amazon's price to earnings ratio right now? What's the price ratio right now, bro? So stock price dipped. Good job, LaFufu. PE ratio, 70, 100. God, they put such a freaking premium on Amazon's PE ratio. God. I don't know why. I mean, yeah, because it's growing pretty rapidly, but there's got to be a slowdown. But we'll be nice and we'll say 20. So, that was the wrong tab. I was like, that doesn't seem right to me. 20. So, let's look at this. Right now, my model is telling me for a 10% return on Amazon stock, you want to pay $982.73 when you're looking at it from an earnings perspective. I'm not using the free cash flow part yet. Maybe it'll give you a different number. I don't know. But from a GAAP earnings perspective, and this is being kind of generous, $982, what is it trading at now? $2,400? This is insanely expensive. This is freaking crazy. All it takes is revenue growth to be lower than expected and the PE ratio to be a lot lower. Bad things happen to Amazon. Revenue slows down, whatever. PE could drop massively. And you get to a point where Amazon is getting annihilated, okay? 35 PE. Even with the 35 PE, it's still freaking expensive. 45 PE, still expensive. 50 PE. Okay, getting a little bit better there. Revenue 15. Okay, maybe it's a buy. Revenue 20%. Okay, now it's a buy. You see how you put all these freaking numbers in here? So basically you need, let's say what? Revenue would be 15. What's the stock at now? It's Amazon stock price. Amazon stock price. So 2,490. So roughly right now, it's a buy if you assume you want a 10% return. Revenue growth is 15% over the next 5 years. And the PE at disposition is 40 or 50. I don't like that. That's not my kind of stock, guys. I'm sorry. Like, the stock is too growthy. It's too rich for me. I would really use 20 for the PE. I would use 12.5% for the revenue growth. Profit margin 4. Okay, if the profit margin's higher, a 7, even then, it's not a buy. So I don't like this company. I'm sorry. But of course, Jeremy, it's gonna run to $4,000, everybody. I'm such a genius. What a freaking moron. What a clown. But Amazon went up, bro. It went up, see? Well, look at that, bro. It went up. Oh, I can't wait till Tesla's chart looks like this one day. I mean, you look at the historic trends. I mean, God, I just don't get it. I'm not touching freaking Amazon. I have it in VT. That's about it. All right, let's read some comments. You captured the poo-poo perfectly. Thank you very much. Didn't he buy like a couple shares of Amazon? I mean, of course he did, because like he's such an idiot. Like I can't explain how dumb this guy is. Okay, but he's gonna pick one stock where he gets lucky on. I don't know if it's Tattoo Trucker's Ball Sack. I don't know if it's Honest My Bonest. And once one of his stocks runs up, he's gonna act like he's a freaking genius. But you look at his analysis, and it's sad. I just did a simple DCF. Simple, discounted cash flow using GAAP earnings. And Amazon is massively overvalued, in my opinion. I wouldn't touch it. I don't get it, guys. I don't know. I'm an idiot. That's why. Amazon is 10,000. Watch it run to 10,000 right after I make this video. Or watch it run to 4,000, just like Jeremy said. Dr. Evil isn't running Amazon anymore, so anyone betting on profits from their sharks with laser beam division has probably... Some of you youngins might not get that. Austin Powers joke. No shirt with a hat, you get service. Thank you. You need to account for CapEx when computing margins for Amazon. Well, with capital expenditures, those are reflected in depreciation. That's how GAAP works. You buy an asset, you depreciate it over its useful life. So it actually is included in GAAP. That's how it works. You can look at it from a cash flow perspective. I mean, I'm not doing that right now. You can, but if there's that much of a discrepancy between the price and the buy point for a 10% return, I don't like that. I'm sorry. P is high because it doesn't show profits, but reinvest capital. Yeah, I don't see how that wouldn't show up on the income statement, though. So when you invest, when you buy capital assets, when you buy a building, it doesn't show up on your income statement like you think it does. You buy a building, you capitalize it, and you depreciate it over time. But even if you spend $1 million on a building, you're not going to see $1 million expense on your income statement. You're going to see whatever the annual depreciation is. That's why GAAP it matches revenues to expenses. That's the whole point of GAAP. Capital expenditures. Yeah, it's depreciation. That's what it is. You clowns use EBITDA. EBITDA. I think Amazon guided 5% growth. If it's 5% growth, oh my God. Oh, Lord. If it's only 5%, woo! I'm not touching that stock. You're so stupid. Operating cash is $40 billion. Also, the market's probably thinking margin expansion. Also, share buybacks have started. I don't know personally, just saying. Maybe they are, but even then, you could plug those numbers into the model. I still think it's expensive. Strongman is almost 100% V2, which is the total world stock. Right, index fund. Strongman is a small amount of individual stocks like Alibaba. Yeah, that's right. That's my portfolio. Call a financial advisor. Amazon had capital expenditures of $81 billion and R&D investment of over $40 billion last year. Okay, maybe that's that the R&D would reflect in their income statement, and the capital expenditures are reflected through depreciation. That's how it works. But yeah, it's not a profitable company. And at some point, like, their revenue is going to slow down. Maybe now is the point where their revenue slows down. I don't know. But even with the numbers I put in on a GAAP basis, no. Sorry. Holding my wife back. Hey, what's up, girl? No signed book. You know, guys, I don't have the books here. I literally uploaded it to Amazon, ironically. And what they do is they literally just do everything for me. They print the book, they ship the book. I just uploaded the manuscript. So I don't get the books. I can't sign the books. You have to mail me the book. I have to sign it and then mail it back to you. That's how I would be able to do it. That's a lot of work. So you got to pay me like $100. There you go. What do you recommend for the collapse? Is it collapsing? I don't know. Buy VT. There you go. Anyway, that's it. Amazon's not a buy. Go look at Everything Money's calculator. They have free cash flow. I don't have that. I don't know if this website has free cash flow margin. If they did, I could start using it. I need to look around a little bit more. If they have free cash flow margin, okay. Free cash flow is a percentage of revenues. Okay, I can start incorporating that into my analysis. But right now, I'm just using GAAP. And with GAAP, it ain't cheap. So that's it. Okay, last question. What would your take on where Bob will be? In the short term, I have no freaking Idea. I have none. And honestly, I can't put a price. I mean, I can put a price on BABA. I'd have to calculate the weighted average cost of capital. All that crap. I don't have time for that. But yeah, I think at some point in the future, it's going to be much higher. And I've laid out my thesis multiple times about BABA. I don't know. Maybe I'm wrong. That's why you should mostly buy index funds. But if I'm right, I'm going to sell it and I'm going to go on vacation. Hey, Strongman, imagine if you buy Tattooed Chef when it trades below cash and make money. There really might be a point where I buy Tattooed Chef. I'm not even freaking joking. And wouldn't it be hilarious if I actually go in and buy Tattooed Chef at like $2 and then I make a freaking fortune? Oh, maybe Waysville becomes profitable. No, you can't do that, ladies and gentlemen. I'm in a portfolio of 50K. I mean, yeah, you might have a good year. It doesn't mean you're going to freaking knock it out of the park your whole freaking life. Investing success is measured in decades. It's not measured in a year. VT sucked. Like, you look at it year over year, yeah, VT's boring, but you consider the long run, everybody's buying and selling stocks, capital gains, losing money here or there. In the long run, I'm going to beat most people, 100%. The strongman ETF. Wonder what that ETF would compose of. Anyway, that's it. Jeremy's a moron. I'm not buying Amazon. Have a wonderful night. Cheers.